For more on China's economy, I'm joined by Anthony Chen in New York. He's the former chief economist at JP Morgan Chase. Anthony, welcome to our show. Will China meet its target? Will China meet its target of 6 to 6.5% in your opinion? And how important is that for Beijing?
I think for Beijing, meeting the target is crucial. I think they will meet the target, but the growth is slowing down. There's no question that economic growth is slowing. All you have to do is look at industrial output. In the month of May, it was the lowest reading in 17 years. Or if you look at April retail sales, again, you see those numbers were the lowest in 16 years. So these numbers are very soft. Of course, car sales in the first half of the year were very soft. But keep in mind that the People's Bank of China is not going to hesitate whatsoever to do whatever they can to make sure that for the full year, they will have economic growth in the neighborhood of 6 to 6.5%. As we see the numbers that are going to be coming out for the second quarter, I think that the risks are that the numbers could come in somewhere between 6.2 and 6.3%. Again, on the softer side, but I look for more stimulus if the number comes in too close to that bottom end of the target range of 6%. I think that this time the government stands ready to act.
On that note, what do you think Beijing have on their toolbox to act?
I think that they still have the opportunity to lower reserve requirements further. I think they want to continue to target those specific areas out there or sectors that need some help. The technology sector, which they certainly want to help, manufacturing. And of course, they're going to try to impact those sectors that have been hit very hard by the increase in tariffs that we saw in the month of May. And let's not lose sight of the fact that both the United States and China are continuing to negotiate. And once we get a resolution to that trade imbalance or impasse, rather, we probably will see that a lot of this negative sentiment and negative downward pressure on economic growth will be somewhat lifted. So I think both countries have some incentive to continue to negotiate moving forward.
So as the trade war stands, how do you think it has impacted China and its economic figures?
I think there's no doubt that all you have to do is look at demand out there. Demand is much lower in China with many of the products. I mentioned before the autos, and certainly business sentiment is also much softer. So the trade impasse and the tariffs have impacted China negatively. But again, it's also impacted the United States negatively. We, in fact, see that in the United States that capital spending is down, business confidence is also down. And of course, we have elections coming up in 2020 in the United States. So all those factors that I've just mentioned hopefully will create some incentive, not to get an immediate trade deal, but at least to continue to make even some small progress over the next couple of months towards an eventual deal.
It does impact both sides. Anthony Chen in New York, thanks so much for joining us.